All right, everyone, I'm doing a video of the October and November trades. And just before we get started, I want to say that the markets have been on quite a tear for October, November, and this first part of December, although last week was a bad week, but things are still very elevated. So I actually haven't been making very many trades. And I've actually been taking money out of the account and putting it into a savings account, earning 3 or 4%. So it's probably a good time to do home repairs and kind of take care of things while the markets are in kind of this euphoric state. So it's actually the most dangerous time to trade would be now, because when things are elevated, right, and they could come back to bottom, you're going to fall higher from the top of the mountain to the bottom of the mountain than when you're already 90% down the mountain and falling again. So I'll quickly go through the trades for October and November and just talk about what I'm thinking for the upcoming month. So I did sell an option in Coke. I did do a quick video on that one. Just it's a very low risk trade, just to tell why I kind of did that one. And then I also sold a spread here in AMD. So I sold $45 put and bought the 35. So by buying the 35, I'm limiting my downside. This trade was done back in October, 2 months ago, so I'm kind of forgetting what was going on, but I believe maybe this was before earnings or after earnings. I'm not really sure. I know AMD got hit a couple times. They kind of pre-announced and got hit, so I think maybe that was the trade there. So the net profit there would be these two numbers, so around $41, $42. And then I bought back this Halliburton trade early, so you can see I bought it back on the 13th for 3 cents or $3, and the trade actually expired on October 28th. However, it became profitable so quickly, it was better for me to buy that back for the $3 rather than wait the 2 weeks to close that trade. So it's better to buy the trade back, take the risk off, and deploy those funds elsewhere. I actually ended up not really deploying the funds elsewhere because there wasn't a ton of opportunities right between then and the 28th. But either way, it's all about building good habits. Had the market continue to go down, that would have been a great way to kind of redeploy those funds and take risk off the table. I also did another trade here in Taiwan Semiconductor. So again, it was a spread. I sold the 45 and I bought the 35 just to limit the downside, in case something crazy would happen, like a war, China-Taiwan war, or if Russia launch a nuclear weapon or something like that. So it's good to have some kind of downside protection in this kind of extremely risky environment we're in right now. And then probably the best trade, I did do a video on Meta or Facebook, kind of laying out that the company looked very strong. So if you remember, they had reported earnings. The stock was trading at like 135, down to like 131, the day before the announcement at 4 p.m. And Facebook or Meta used to be, a $350 stock, something like that. So it's already come down considerably. They released earnings. It dropped down to, I think, just above 100 that day. I made the video saying, if it continues to go down, I think it would be a great opportunity. I didn't make the trade until maybe a week after or so, after that weekend. But Facebook continued to go down, or Meta continued to go back down. I think it traded around 88, 87. That's when I made this trade. You can go back and look at a chart of Meta, but it was really kind of the absolute floor of that stock. So I sold the 70 for $52, and I bought the 40 just for some downside protection in case something crazy would happen. And so things were so bearish in that stock. Everyone was negative on CNBC, any YouTube articles, people in comments, and I think Meta's trading around 115. Don't quote me on there, but it's trading very high. So that was probably one of the best trades of the year. And if you go back and look at the video, you can look at the process and the thought, the thinking behind that to make that trade. Look at the fundamentals of the company. Look at how far oversold it was. You're saying they have 3 kind of golden businesses there, which is the Instagram, I think, the regular Facebook. I'm not even on Facebook or Instagram, but I know a lot about the financials of the company. So all these blanks you hear, so these are just my position's expiring worthless, right? Which is what we want to happen. We're selling them for, in this case, well, let's look at this Taiwan Semiconductor, so you can see it expires here. So we sold this for $24, and then it lost all of its value, right? Because in order for this to lose money on this trade, Taiwan Semiconductor would have to drop below the 45, which it did not do. I think Warren Buffett announced he took a stake in TSM, and it kind of skyrocketed up. I think it might be around a $70 stock or something right now. So anyway, yep, all these blanks are just those trades that we put on when the market was getting hammered, expiring worthless. Just to kind of wrap up the video, my thoughts are, so it is December 11th. So this week we have the CPI data on Tuesday morning, 8:30 a.m. And then we have the Fed, I think their announcement is on Wednesday. So those are 2 big market moving events. So if those things really don't rock the market, or we see a lot of sell-off and stuff like that, you can expect kind of the Santa Claus rally would be my expectation, and things would kind of meander up through the holidays, through New Year's, and then January, all bets are off. Anything could happen in January. We could see continue to go up, or markets could crash. Who really knows? Just some historical context. I think December markets are up 80% of the time. So if that's the case, you probably won't be doing a lot. Some other things to watch this week. I know Oracle reports Monday, which is tomorrow after the close. And I think we have Adobe, I don't know, Wednesday. Actually, I think it's Thursday. And then I think Lake Accenture is another big company reporting. So that's it. So thank you for listening. Bye.